Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, we are going to actually we're doing a video about a comment somebody made because they put a bunch of great information in here.
Okay, perfect.
Okay, so the video was called Record-Breaking Surge, Why Investors Are Snapping Up Homes in 2025. And of course, the last quarter, 37% of all homes in the U.S. were purchased by investors, which is like the highest in at least the last 5 years, maybe before that. Okay, so the person that made this comment, first of all, has been watching the channel a long time, but a regular commenter. And so this is what they said. I'll put the comment up, we'll talk about it. Bought back in May. Reasons are: 1, found a great deal. 2, had excess cash in a high yield savings account. 3, expecting interest rates to drop. 4, dollar being devalued, feel safer with a hard asset. 5, rent keep going higher in my area. 6, tax incentives. 7, thinking about retiring in 9 years using rental income. So what we're going to do is we're going to talk about these in order. We'll just go through them, and because this is what's funny. Had a conversation today with another investor who said literally they want to take a couple $1 million, buy a bunch of rentals. They knew exactly how much that was going to pay. And then these reasons were the reason, like almost the exact reasons were the reasons that they wanted to do this. So let's go through these one at a time. Okay, Juana, found a great deal. You flipped a lot of houses. How is all of the profit made in a flip? Is it because you picked the right type of countertop when you was it the coordination of the paint colors?
You know, it was the little flag for the mailbox.
The mailbox flag.
That's what
always it's a curb appeal. The right flag.
Okay, so all the money's made on the buy side, right? So when you buy a property, if you buy it right, then long term you're going to make money on the property. If you don't buy it right, then that's when you get into trouble from the very start. When you buy a property right, what that means is that you're going to have a better return on your investment as far as the rent coming in, because how much money have you tied up versus how much money you're getting in rent. And then when you go to sell, of course you've got the appreciation. Most investors are not really that concerned with appreciation because they're holding it for the long term, so the appreciation will materialize over time because real estate is a long game. So most investors are concerned about the cash flow. So basically, if I'm tying up, let's say $400,000, how much money am I getting on that $400,000? Well, you should be getting somewhere around maybe $20,000 a year, kind of take-home money, right? By the time you've already paid your taxes, your insurance, maybe HOAs and that sort of thing, you should be taking home somewhere around maybe $18,000 to $20,000.
Okay. The next one was had some money sitting around in a high yield savings account. Now those exist right now. They didn't exist 5 years ago. Here is a Fred chart, household checkable deposits of currency. 5 years ago, we had about $1 billion, maybe less than $1 billion. This is homeowner. This is households. Okay, this is not BlackRock. This is all of us. Today, almost $4.5 trillion of money sitting in checkable deposits and currency. This is checkings accounts, savings accounts. This is a lot of cash. 4.5x the amount of people are sitting on all this cash, and they're looking for a place to put it.
Right. So I was talking with somebody last week, and he was sharing with me that his institution was previously offering, let's say, about 4.5, and that offer ended a few weeks ago, and now his institution is offering about 4%. So investors are seeing that every few months, this is going down, not up. So they're looking to maintain their rate of return. So again, this person saw that and decided to have a more consistent rate of return by investing the money in a rental property.
Okay, the next one was expect interest rates to drop.
Right.
So here's a quote. Several financial institutions predict the Federal Reserve will begin cutting interest rates in 2026. There's actually, the consensus is there'll be 2 rate cuts this year. Goldman Sachs and Morgan Stanley projecting the interest rate to reach a terminal range of 2.5 to 3.25 by the end of the year, which is 2026. The prediction indicate a shift from the current target of 4.25 to 4.5. If we get down to 2.5%, we're going to see 4.5% mortgage rates again. And what do you think is going to happen to the housing market if sometime in 2026 we have 4.5% interest rates?
It's going to explode. So it's going to explode for two reasons. Well, one, because interest rates are down, right? But what's going to happen is you're going to see a lot of refinancing going on. So a lot of cash being made available again, both because people will be able to take money out of their properties and because people will be able to have lower payments and have extra money every month to do something else with it. And then everybody else who's been on the sidelines and waiting to buy is going to definitely hit the market. What you're also going to see with that is because you're going to have this huge influx of buyers, you're going to see the return of multiple offers and basically all the chaos that we've seen in the past when we've had lower interest rates.
The idea is if you wait for interest rates to drop and prices have gone up, and if you're paying cash, this isn't an issue. But if you are an investor who's maybe putting 20, 30% down and getting a loan, you just lock in the price, eat the payment maybe, or not have as much cash flow. But then you when you refi, you're better waiting a year or two and refining than waiting a year or two to buy.
Right.
And originating at a low rate, which is a lot of people want, like the panacea of home prices dropping, interest rates drop, they slide right in there. Like nobody sees this. Like nobody sees home prices going down or interest rates going down. They somehow the only one. And then as soon as they purchase, they're like, okay, now whatever can happen.
Well, and this kind of circles back to where we started. Where is the money made? It's made on the buy side.
Yep.
So, rates do change. Your purchase price never changes.
Everybody I know a lot of airline pilots, they all refied in like 2020, 2021. And these are generally people with, they do have high incomes, but they tend to have bigger homes. So to some of them, it was like one or two, like $1,000 a month plus difference in their payment. On their $2.5 million house, they're like, oh yeah, I've got, the lowest one I heard was like 1.9% or something. I don't know how that maybe was a VA rate. I don't know. Okay, the next comment was the currency is being devalued. So what this shows is this is a chart. This comes from the Federal Reserve of St. Louis. What they did is they tracked all of these little squiggly lines are previous years. And what this shows is that this is what the dollar is worth versus a bucket of global securities. So I went to Singapore in January, and you got $1.35 Singapore dollar for $1 US. It was $1.35 to 1. It's like $1.25 now. You get 10 cent less Singapore dollar for every US dollar. And if you look at this here, this shows that our dollar is down 7.4% compared to other currencies. So the idea is here is let's lock in an asset that's like you're getting 5% in your high yield savings account, but it's worth it's worth less because the dollar's worth less. So you stick it in a hard asset.
Right. So just so you understand, while on the surface this is not a great thing, if you really think about it, it also makes U.S. goods more competitive abroad. So that means that we get to export more, and maybe you've seen that in some of the trade figures recently, where we're not doing as bad as we normally do as far as our trade deficit.
It does help some tourism too. More people, yes. Some people may be more likely to come. Okay, the next one was the rent prices are going up in my area. Now, there have been some Crash Bros making videos, but I went and found the most recent article. This is using Redfin data. Rent prices are up a year ago, from a year ago, in 47 of the 50 biggest metro areas. They took the largest metro areas in the country, rising the most were 5.9, 5.9, 5.3, 5.3. So rents are going up. That's not your return. That's the amount of rent that's going up. So if rent's going up 5.9% on a $2,000 rent, it's going up $100. Mm-hmm. So you're putting an extra $1,200 a year into your pocket. And if they go up by that every year you're putting $1,200 more a year into your pocket. Mm-hmm. Okay. A couple years ago, 21 or 2, we did this video of the top 4 of the largest 400 markets in the U.S. Rent was up in 399 of them year over year. Do you remember the one that it was down 0.1%?
Yes.
It was here in Vegas. It was funny. It was down, but it was misleading because we had literally had the 2 largest years of like rent increase we'd ever had over a 2-year period, and then they just kind of maybe it might have been like just noise of like how they calculate it, but we were down 0.1%. Everything else was up. Tax incentives, Juana. What are some tax incentives if you buy Bitcoin, if you buy Nvidia, not say or gold, and you sell them? You have some tax consequences, right? Long-term, short-term. We're not tax accountants, but there's some tax incentives. Let's talk about some of these tax incentives. Let's say you're an investor, you buy a investment property, you originate a mortgage. You get a mortgage interest deduction.
You get to
as an investor.
Yes, you get to deduct your mortgage interest. You get to deduct your property taxes. You get to deduct your insurance because those are all costs. You get to deduct HOA dues because those are costs. You get to deduct repairs; those are costs. Depending on your tax advisor's advice, you might do cost segregation. Cost segregation is a really sexy thing that has you take all your depreciation up front, which depending, if you've had a good year, maybe that makes sense for you. So all kinds of different tax strategies that make it profitable for you to have an investment property.
Yeah, it was funny because I'm talking to somebody who had sold a bunch of stocks and was going to have this big gain, but they wanted to use the money some of it to just spend, but some of it to buy a house. And then you do the cost aggregation, you pull forward all this depreciation, so you basically wipe out all the gains of your stock. So you get to pull the money out essentially for free on some future tax thing in the future that you may or may not have.
Right. So, at some point there is recapture. However, you can delay that. You can do a 1031 exchange and kind of keep kicking the can down the road. So there are all kinds of things that can be done. Talk to your tax person. We're not accountants. We're not tax people. They'll help you much more than we can. But it just gives you things to have a conversation about.
Also, this is also strategy I've seen people use. They have a rental house. They rent it out. And then at some point they say, I think I'm going to sell it, but they move into it. Live in it for a couple years, sell it. What happens? Do you pay taxes on gains in your primary residence?
You have to live in it for a couple of years, and then you don't pay taxes. At least that's what the current tax code is.
So what's interesting is you could rent the house for like 20 years, but if you live in it for a couple of years, it magically becomes a. And then I read this story. This is super funny. There were people literally getting married because they had like a $500,000 gain on their house, and they didn't want to pay. The limit for one person is $250, but for a couple, they were literally getting married just to, hey, like I need to get married. Let's get married so I can not pay this tax. Because if you're very low income, you don't have a lot of money, and you just made $500 on $1,000 house, that's great. But the $50,000, $60,000, $70,000 you may have to pay in taxes is a huge hit to you into your life. So maybe it's worth it to get married. I thought that was super funny because that would like never cross my mind. It like get married to save on the tax. But here's another thing too. Real residential property prices in the U.S. So the blue line is the actual Fred line. You can go to Fred, Federal Reserve, and you can go pull up all these amazing charts. This is all data the Federal Reserve has gathered. This is indexed. So what's interesting about indexed is if you go back to 2012 in here, where right about the time that blue line crosses 100, so some point in 2012, that means that the number is a percentage. So it'd be 110 means prices went up 10%, 120, 20%. And as you can see from 2012 until today, they've gone up 60%. Home prices are up 60% over the last 12 years, 13 years. That's not unheard of because wages are probably up that much, and the CPI is probably up that much, and stock market's up way more than that, right? A lot of things are up. Gold, Bitcoin, everything else up way more than that too. But I drew this trend line. This is just a line I stuck in here to give you some perspective. You can see the run up from 2020 to 2022. And then, so a lot of people are looking at this, and I pulled up this chart for two reasons, Juana. The first one is, I want to point something very interesting on this. Do you see how there's places in the chart where it kind of goes up and then maybe goes sideways or down a little, and it goes up and sideways or down? All of those sideways or downs are a spring to fall. You can see literally home prices either stop going up or go down a little, stop going up or down a little. 2020 to 2022, we had mostly just going up because we had nonstop demand for like 2 full years. And then you can see they sort of leveled off, went down, and then they kind of hung out. But you can still see like 2023, they went up and they came down a little. 2024, they went up and came down. And then the end is 2025. You can see we're now in the just in the down from the spring to fall thing. And I drew this line. So a lot of people are looking at this too, because you actually get not just rent when you buy investment property, but you also get future appreciation, which you can capture, which you don't get if your money's sitting in a high yield savings account. And if you bought NVIDIA or Bitcoin, that's great, but you don't get monthly rent payments. I have nothing against cryptocurrencies. I have nothing against gold. I have nothing against NVIDIA. You know, obviously we're invested in everything, including real estate, but our expertise is real estate. So this is like, these are the reasons we invest. This is the reason our investors invest. This is the reason why people that watch the channel are trying to understand like what the value is. I thought it was interesting that somebody said they could basically retire from like the rental income. Quick story, I spent a lot of my life living with my grandmother. Juan has heard this story before, who lived on $300 a month. Now, if she had the ability to have a rental property, and this was in a very poor part of Texas, if she had a rental property that gave her $300 a month, like out, you know, the net out the door, in addition to her $300 Social Security, because that's all she lived on, that double of her money would have literally changed her life. Like, it would have allowed her to do a lot more. Like, it would allow her maybe to get a little bit better car, or, you know, like the house didn't have AC, and this was like South Texas. It was, you know, she lived it very, she didn't have a washer dryer. She like washed clothes in the sink and hung them out in the backyard. It was like typically living very poor. And I spent over a decade of my life, you know, 3 months of the year in that environment, kind of understanding that. So when you understand that to someone who's an investment banker and they say, oh, we've got some rentals, it probably, or they own a plumbing supply company or whatever, they probably get most of their income, or you're a real estate agent, or you're an airline pilot or whatever. But to a lot of people, this is a huge, like the one rental maybe changes that could literally change their life and change their family's life.
Sure.
Now, anyway, so thanks for putting the comment. I thought it was pretty cool to see that. And with all the reasons listed, and then there were people actually under the comments below it that said, hey, I like literally am doing the exact same thing, and then having the conversation with somebody who said the exact same thing today.
Yeah. So very interesting. Leave us your real estate related comments. We appreciate them. Remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.